Welcome to our weekly Forex forecast. And today we are looking at the week of August 5th to the 9th, 2019. Before we dive into it, just a quick disclaimer here. This is for educational purposes only. Trading is a risky business, especially right now when we have it's the summer trading, so we have low liquidity in the market because a lot of the big traders are actually away on vacation. So liquidity drops in the market, and as a result of that, we could get moves that are larger than we would normally see them. So just be careful with that. All right, so let's move into our analysis here. So as usual, we'll start off by taking a look at our calendar here. I use Forex Factory calendar, but feel free to use whichever calendar you prefer. All right, so to start off with, on Monday here, we have PMI numbers out of the Eurozone, and we also have non-manufacturing PMI numbers as well as a final services PMI number here for the US. So keep an eye on these numbers. These are precursor to retail sales and GDP numbers, so an important number to pay attention to and can move the market. And then in the Asian session, we have employment data out of New Zealand. This is important as we have seen both the Reserve Bank of New Zealand and Reserve Bank of Australia have been on this path to easing monetary policy. So if we see data coming out negative, it gives them more reason to actually have an expansionary monetary policy, which would be negative for the respective currencies. So if the numbers are negative, we could see a negative impact on the New Zealand dollar here as well. And then on Tuesday here, we have Reserve Bank of Australia cash statement. So as we can see here, Reserve Bank of Australia, RBA here, has cut rates previously. They've gone from 1.5 to 1% as it stands right now. So we are not expecting another interest rate cut at this point. They have cut in May and in June as well. So two back-to-back rate cuts, which shows that they're concerned about the economy. So we have to, at this point, we'll just be looking at their commentary. If they give any kind of forward guidance in terms of more interest rate cuts coming, or if they talk about still concerns about the economy and the US-China trade relationships, any of those things would actually be negative for the Australian dollar. So we need to pay attention to that. And on the same day here, we also have Reserve Bank of New Zealand cash rate as well as their rate statement here. So we are expecting New Zealand interest rate getting cut. So if it does get cut, we could see a drop in New Zealand dollar. Now, on the other hand, if we see that, or if we do not get an interest rate cut, we could see New Zealand dollar move in the opposite direction because when there's an expectation and that doesn't get met, we usually see a move in the opposite direction. So pay attention to that there. And then on Wednesday, I don't really see anything major here. Thursday here, we have RBA Governor Lau speaking here. We do have ECB economic bulletin. So ECB has been dovish overall. So if we have comments that are seen as concerns for ECB, that could have a negative impact on the euro here. And then we have monetary policy statement out of Australia. So any negative comments here or concerns about the economy are likely to cause Australian dollar to drop. And then on Friday here, we have GDP numbers out of UK. So any drop in numbers, again, could have a negative impact on the British pound. So British pound has been impacted by Brexit developments lately, and any kind of negative. So Bank of England still has not talked about any interest rate cuts or any sort of support in terms of the monetary policy. But if the data starts coming out negative, they are likely to do so as well, because they are one of the few banks that have not done that. So that's all we have for plus and the employment numbers out of Canada. Canadian dollar has been quite strong. So again, negative employment numbers will have a negative impact on Canadian dollar as well. Other than that, that is all we have. Now, we also do need to pay attention to the news out of Iran here. So Brexit news as well as Iran. So here Iran seizes another oil tanker here. So this is something we have to keep an eye on. If there are any comments that show that there's a concern of an attack in Iran, that could be that will be market moving. So we need to pay attention to that. Another thing that happened last week was that President Trump tweeted that they were going to raise tariffs. So the U.S. and China trade war negotiations or discussions, trade discussions, are not going so well. So all of a sudden, we got this tweet, or we saw this tweet from President Trump saying that U.S. will be putting additional tariffs on the on China, on Chinese products starting September 1st. So we just have to sort of pay attention to those developments. Anytime we hear comments like that, we see Japanese yen currency goes up, and we also see stock markets drop. So especially right now when there's low liquidity in the markets, these comments can be really market moving, and it can change the direction of the different pairs. So just keep that in mind. In summer, we just have to be careful with the trading. All right, so let's go on to the charts here and take a look at what's going on. So we'll go to the weekly charts here. So in terms of our euro here, we saw that euro had dropped and then it has gone back up here. So this is the candle we have at the moment. So we see a large pin in the bottom that shows a rejection from this level. It went right into this target point. Last week, we were looking for it to drop, and it went right into target here. Now, we have a big pin in the bottom. So I am neutral on this at this point. We could see a drop right into the support here. And if it holds above, I will look for price to go higher. So at this point, my bias is neutral on this. It can move in any direction. I do not like the large pin in the bottom. See, we have when we have a large pin, prices can go higher. So I would pay attention to how price reacts at the top here. So if it breaks through 1.1160, I would look for price to go higher into 1230 level and potentially all the way into 1300. It could do that. But as long as it stays below the high of the weekly candle here, it could still do a drop and just go sideways. So that's what I would watch out for here. Bias overall is neutral for euro dollar, and the levels I'm watching are the test of the base here. Actually, we don't need this one. So I will look for price to, or I would watch price testing the bottom. If it doesn't break through, I'm looking for it to go towards the top here. If it breaks the high, I'm looking for it to go to the next level. All right, pound dollar here. Pound was strong towards later part of the week here, but prior to that, it did take quite a bit of a dip here, and most of it related to the Brexit developments. So bias here is bearish. Last week, we were looking for a drop, so we got that drop, and now we are heading towards our support levels right now. So bias is still bearish. In terms of the pullback here, the current 1.22 is a good pullback level. If we get a deeper pullback, we could look at 2280 level here, but bias is bearish and I'm looking for price to drop. First target would be a retest of 1.2060 level, and then a second one fairly close here, which is 1.1980. And beyond that, we have this all the way into the bottom here. That's quite a drop. I'm not looking for a drastic drop at this point. So let's see if we have anything in the middle. So we're into like some substantial support levels here, and price can turn around. So just be careful here. But bias for now is to the downside. Aussie dollar here, Aussie has been dropping here, especially with the comments from President Trump. So like I mentioned, when the trade negotiations are going well, stock markets go up, and we also see the safe haven assets drop. And with trade negotiations going well, we usually see Australia and New Zealand, both of these currencies doing well because they are close trade partners with China. So if Chinese economy is doing well, they will import more stuff from Australia and New Zealand. So these two currencies do well. However, when President Trump sends out a tweet saying they are going to raise tariffs on China, that shows us that the trade negotiations have fallen apart and they're not progressing the way they would have expected them to. And as a result of that, if there are additional tariffs, that would be negative for Australian dollar and New Zealand dollar. And that's why we saw both of these currencies decline last week. So now we have to see, because of the low liquidity, they dropped quite a bit. Now, when we see this sudden reaction, a lot of times it can get turned around. So we could see retracements. So watch out for that. Last week, though, we were looking for a drop. We got that. But so this week as well, bias is bearish still. But again, like I said, just be careful with where we are, because we are right into these support levels that we haven't been in quite some time. So all the way to 2014 here and 2008. So when we are into these levels, things can turn around fairly quickly. So watch out for that. For now, though, bias is bearish. We could get a pullback potentially into 0.6860 and then a drop here. So first target is 0.6750, then 0.6640. Our bias here is bearish for Aussie dollar. New Zealand dollar here, this has also taken a tumble. Last week we were looking for a drop. We have that drop here. So now we are still bearish here. That's a nice solid bearish candle close. But again, because we have seen these big drops, like I mentioned, things can turn around. So watch out for that. But this is the type of move I am looking for. Bias is bearish, pullback level 0.6570, and then a drop into 0.6430. So bearish bias for New Zealand dollar. Dollar CAD here, this one has been interesting. We have seen the move up. Last time we were looking for a move up. We got that. But now we have an indecision candle. So we have an indecision candle here. So if you were to remove all these, this candle here has pins on both sides, and we have a small candle body, which gives us a neutral candle. We are right into our resistance here. So what could happen with this one is price could go into the high and then come back down. So that's the type of move I would look for. It could become range bound here, or it could turn around. So bias is slightly bullish, but overall neutral here for our dollar CAD. It could move in either direction. Yes, on the daily, we do have we have a nice pin bar right into the resistance, which would suggest that it could drop. So yeah, this one could go in either direction. So bias for now is neutral, and we have to see which way it breaks. If it breaks the high, I will look for it to go higher into the top of these candles at 1.3450. If it breaks below the bottom, I will look for price to go into 1.300 here towards the bottom of these candles. But until that time, I will just look for a sideways move. Euro pound here, this one went up and then kind of went sideways here. So last week we have a nice bullish pin bar here. So we got that move to the upside, and this is where we are currently. So this is looking bullish at this point. So what I would look for here would be potentially a pullback into 0.91 here. and then a further move to the upside if it holds above this resistance here, which could act as support. And then I would look for a further move to the upside here. So bias is bullish. First target is 0.9240 and then 0.9300. So we have a bullish bias here for euro pound. Euro Swiss franc here, this one took quite a tumble here, and we have a drop. So we had talked about last week how price was right into resistance here. So it couldn't break through, even though we did have a bullish candle here. It could not break through the resistance, and we have a huge drop here. So this gives us a bearish bias here. So looking for price to move lower, and our targets here in this case would be, so this is what I would look for, a potential pullback into 1.0960 and then a drop. First target is 1.0840 level into the base of these candles here. Second target would be 1.0780. So bias here is bearish for Euro Swiss franc. Pound Swiss franc here, this one as well, a big drop here. So bias is bearish here. And now we are into some important support levels here. As we can see, we haven't been at this spot since 2016. So just be careful at these levels because things can turn around. So bias is still bearish here, but I would be very, very careful as we look for price to break through because it can turn around. So for now, bearish bias, I will look for a pullback either into 1.2020 or we could get a deeper pullback into 1.2120, and then I will look for a drop. Now we have a big pin here. So essentially we could get this drop on this side as well. But like I said, just be careful because it can go in the opposite direction here as well. So target here is 1.1450, which is quite far. So it may not get there all at once. Dollar Swiss franc here, this one is also bearish. We have seen a large drop. Price got stuck into the high of the range here. So now I will look for price to drop from here. So this is where we are. We have seen a rejection off of this level here, which was our range, top of our range. So now we have a bearish candle close. We could get a pullback. So let's switch this around. So we could get a pullback into potentially into 0.9895, so 9,900 or 9850. And then I will look for a drop here. First target 0.9765. Second target would be 0.9700. So bias here is bearish. Yen crosses. Let's take a look at these ones here. With all that Brexit news, of course, we saw yen crosses drop as well. I said pound yen drop as well. Plus the tweets from President Trump caused yen crosses to drop because when there are issues, our safe haven assets go up, which is our yen. Our yen is one of those. So we tend to see a drop in yen crosses. So our last week, our bias was bearish. And of course, we got that move. And now we have a large bearish candle. So just be careful with this one here. Just like we had a big bearish candle here and then price went up, we could see a reversal, especially when prices move very rapidly. But for now, bias is bearish here based on the sentiment as well as the technicals here. This is looking bearish. So we could get a move into 130.60 and then potential drop here. Target is 126.30 level here. So bearish bias for pound yen. Euro yen here, this one has dropped quite a bit as well. And we have nice bearish candle close. Last week, this was neutral. It did break through our support level. So now we have a bearish candle here. So bias is to the downside here. Next target is 117. And then if it goes below that here, we're looking at 116.30 here. So bias is bearish for this one. So this is how I would look at it. And the move that we are looking for here, potential pullback into 119.20 potentially. And then I'm looking for a drop here. Bias is bearish. Dollar yen here, huge drops in dollar yen as well. So US dollar did not do too well, as we can imagine, with those tariff comments, because what hurts China also hurts our US dollar as well. So this is where we are with the US dollar. Bias here is bearish, and we could get a pullback into 107.1 or 20 level potentially. Bias though is bearish. 105.60 first target, 104.70 will be the second target here. So bias is bearish for dollar yen at this point as well. Aussie yen, a huge drop in Aussie yen as well. Like I mentioned, when trade negotiations fall apart, this is bad for New Zealand dollar and Australian dollar, because of the exports that go from those countries into China. So we tend to see a big drop in these currencies when that happens. So here we can see that bias is bearish. Next target is 70.70. Okay, so this is what we're looking at, bearish bias here. In terms of the pullback here, we could get a pullback potentially into 73.20 here, and then looking for a drop, but bias is bearish, and next, and kind of like this here, 70.70 is the target to the downside. New Zealand here, a big drop in New Zealand dollar here as well. Last week, we were looking for a drop here because we had a nice bearish engulfing candle. So we got that. Now we are into some big support levels. And my charts are not even good beyond this level. So let's see what we have here. 68 and then 66.80. So bearish bias here. But again, with all these huge moves, always look for potential reversals or retracements. So this is kind of what we're looking for. 70.80 could be a potential level for a pullback, and then 68.0 and 66.80 are the two next levels. So the question here is, a lot of pairs are extended towards the downside. So we're expecting pullbacks. Yes, because everything is so stretched, we could get pullback. So I always look for a pullback before a continuation. So, and those provide us better opportunities to get into the trades. So that's what we have here. CAD yen also bearish here. So I would look for a potential pullback into 81, or we could get slightly higher even in this one, 81.30-ish level, but bias is bearish again. And I will watch out for this drop here. First target is 80 and then 79. So bearish bias here as well. All right, so let's move on to commodities here. Our commodities have been more range bound here. So silver here is range bound. It went and tested the high. It's right into the middle here. So a little bit bearish, but we have pins on both sides. So I'm neutral on this one. We have to see how price reacts. So if we go to our daily chart here for a second, we see that it's been trading in this range for quite some time, hasn't quite gotten out of it. We did have a nice bearish close here, but then we had this wacky move and it's just kind of sitting here for now. So as long as price stays above this 16.00, we are likely to see price just go sideways here, and it can just do one of these, go like this. So I will watch out for that. Now, should price break through the support here, then we have this big move here that was quite, it was quite an inefficient move, so it could get filled. So watch out for that. For now, though, as long as it stays above 16, I'm looking for it to go up higher. If it breaks through, then we have this move here, like I said. So in that case, bias will turn bearish. But in this, at the same time here, because we are in a range at the moment, if it breaks to the high, then I would look for 17 or 16.90 as the next target. For now, it's just holding this level, so we just need to keep an eye on it. Gold here. Gold has actually done well. It's still trading in that range, but if you see, it has been making higher lows. Hasn't quite made consistent higher highs, but it is making higher lows. So it's pushing higher here, which gives us the bullish bias here. The weekly candle is bullish. It is into resistance, so we do need to see a break of the resistance here. So we need to see a breakout before we can get super bullish on this, but this is looking bullish. And once we see the break, we can look for a further move higher into 1485. So bullish bias for gold, but if it goes into the high and holds below, then I would look for it to come back into the range here. For now, though, bias is bullish here for gold. Oil here, oil has not done so well. It has moved in both directions. We saw it go up and then quite a big drop here. And then we have seen, and the reason the oil dropped here, just to kind of touch on that, again, related to President Trump's comments. So we talked about how New Zealand dollar and Australian dollar are impacted because of close relationship between China and Australia and New Zealand in terms of exports. Now, oil drops because China is a big consumer of oil. So when Chinese economy is not doing so well, partly because they cannot export their products due to higher tariffs, that has a negative impact on oil, because now the assumption is that as much oil will not be needed by China. So consumption of oil will drop, which in turn is negative for oil. So all these things are interrelated. That's why we want to look at different aspects of the market and what's going on overall. So bias here is bearish here, but we also have pins on both sides, which means we have to be careful. So with this one here, as long as price stays below 57.35 here, I would look for a further drop, but we could see it kind of go sideways here as well. So watch out for that. Right now, everything is stretched due to lower liquidity, which caused the markets to move further. So just watch out, because they can go back and forth, and things can go awry really, really rapidly here. So overall, right now, it's bearish here. I would look for a retest of 53.50. If it holds above, I'm looking for a sideways move. If it drops through, then our next target is 51.80 here. So overall bias for oil. Copper here, copper dropped quite rapidly as well. We were looking for a drop last week as well, and now we have that. So bias here is bearish still, and potential pullback into 2.55, and then a further drop into 2.45 there. So bearish bias here for copper as well. Bitcoin, again, I do not have the latest chart, so just kind of look for the latest chart. My broker doesn't have that on the weekends, Based on this candle, though, this is still holding sideways. It hasn't broken down, but it hasn't really gone anywhere. So it's just been in this range. So before it was trading in this higher range, now it's in this narrower range, but it still looks, it looks neutral to me at this point. It's not, we have a lower high, we have a higher low, so it's neutral in the middle. We need to see which direction it wants to go in. So for now, my bias is neutral for Bitcoin. Oh yeah, so his question is, is copper at support? Yes, it is into coming up into some major support here. So it has broken through this previous support level, and we are into support right into this support here. So yes, we have to watch out, as well as the move is quite large here, which can cause it to turn around as well. But we do have major support that's coming up here, slightly lower as well. S&P 500 equity markets dropped here. Couple of things here. The Fed announcement was actually not that positive. Fed did cut rates, but they didn't really give too much forward guidance on when or if the rates will be cut again. This was an insurance, or seen as an insurance cut, but they did not really change their stance too much. So underlying thing is that they will pay attention to the data that's coming out. They will keep an eye on developments, and then they will be ready to adjust the monetary policy based on that. But for now, they did not say that they're going to continue on with too much easing or cutting of rates here. So as a result of that, we have seen equity markets kind of drop here, plus the comments from President Trump really made them drop. Anytime the trade negotiations fall apart, that is negative for the equity markets, because not only does it impact Chinese products coming into US, it also impacts US products going out into China, because China will retaliate with their own tariffs, which causes basically problems on both sides. That's why US equity markets do tend to drop when there are these issues in the market. So overall, bias is bearish here. We could get a pullback into this 2950 level here, and then a further move to the downside. Bias is bearish, though. 2875 is the target to the downside here. Same thing with NASDAQ here. This one dropped as well. A potential pullback into 7812 level here, or 7800 level, and then we could get a further drop here as well. Bias is bearish. So just like we talked about how the comments or tweets can make the market drop, they can also make the market go up. So should we get another tweet that says, hey, we are back to talking terms, that would be positive for the markets, and we are likely to see a reversal of what we saw. Keep that in mind. Any comments will move the market, especially during low liquidity conditions. So both NASDAQ and S&P 500 were bearish. This one is DAX here. DAX is looking bearish as well. Huge candle here, bearish engulfing candle. So potential pullback into 12,000. And then our target here is this here at 11,620. So bearish bias for DAX. FTSE here, also bearish, huge move to the downside here. And next target here is 7255 level. And for pullback, potentially into 7450. So something like that. And then, like I said, 7250 is the target here. So bias is bearish for FTSE as well. Last but not least here, Nikkei, huge bearish engulfing candle here. This one we have seen this trade in a range. So this is the range that it was trading in for a number of weeks here. Now we have a solid bearish candle close, so we could see a further drop here. Target is 20,300 here. and potential pullback, I would say, into 21,250 potentially, and then a drop here. So bias is bearish. All right, any questions before we wrap it up? No questions? If you would like to join me for daily analysis of similar sort that we do every single day, we'll look at over 20 pairs on the daily basis, as well as equities and commodities. You can join me in the Trade Vault, and of course, this is the link for that. All right, you guys have a wonderful trading week, and I'll see you again next week. Bye for now.